For my part, I will be explaining about the background of the company. So first, Nestle. Nestle is a multinational food and beverage company that has been in operation for over 150 years. The company has a long history in Malaysia, having been established in the country in 1912. Nestle Malaysia has grown to become one of the largest food and beverage company in the country, with a wide range of well-known and respected brands such as Milo, Nescafe, Nestle, Perth Life, and Maggi. Nestle Malaysia has played a vital role in the country food and beverage industry and has been committed to providing a high-quality product and services to consumers. The company is dedicated to promoting health, wellness, and nutrition through its product and initiative. Overall, Nestle Malaysia is a well-established and respected company with a strong reputation for providing high-quality products and services, promoting health and wellness, and being a responsible corporate citizen. Next, Hap Seng Industri Berhad is a reputable and well-established company in the food industry in Malaysia with a history dating back to 1946. The company has been operating for over 70 years and has built a strong reputation for producing high-quality crackers and biscuits. The company head office is located in Penang, Malaysia, with manufacturing facilities in Malaysia and China. The company specializes in the manufacturing and sale of cracker and biscuit and has a wide range of products that include cream cracker, sandwich cracker, and cracker snack. They also produce a variety of biscuits such as cream biscuit, chocolate biscuit, and wholemeal biscuit. These products are sold in various markets including Southeast Asia, the Middle East, and Africa. Hap Seng Industri Berhad is committed to providing high-quality product to its customer, and it is evident in every stage of the production process. They use high-grade raw material in the production process and have strict quality control measures in place to ensure that all products meet the highest standard. In conclusion, Hap Seng Industri Berhad is a reputable and well-established company in the food industry, known for its high-quality crackers and biscuits. With its commitment to quality, sustainability, and corporate social responsibility, it will continue to provide a customer with delicious and wholesome products for many years to come. So third one is Dutch Lady Milk Industri Berhad. Dutch Lady Milk Industri Berhad, or we call Dutch Lady Malaysia, is a leading dairy company in Malaysia that has been in operation for over 50 years. Established in 1963, the company is a subsidiary of Royal Friesland Campina, one of the largest dairy companies in the world. The company operates a modern dairy farm in Rembau, Negeri Sembilan, where they produce high-quality milk and other dairy products that are enjoyed by many Malaysians. The farm is equipped with the latest technology and equipment to ensure that the milk is of the highest quality, and it also adheres to international standards. Dutch Lady Malaysia is also committed to sustainability, and they have implemented several measures to reduce their environmental footprint. They have a program called Dutch Lady Goes Green, which aim to reduce their carbon emission and promote sustainable farming practice. In conclusion, Dutch Lady Malaysia is a reputable and well-established company that is committed to providing nutritious and delicious dairy products while also promoting health, living, and sustainability. Well, that's all for me. We will continue with the next presenter.
So, I am Nuga Anshafika binti Yusuf. We'll continue to explain about the analysis of common size statement of financial position by three companies that we choose, which is Nestle, Hap Seng, and Dutch Lady Milk. So, we use common size analysis in this report because this method will help to identify area of potential financial strain or weaknesses in the company. So for the next analysis of common size statement of financial position by Nestle Sandian Berhad as at 31 December, if you see the chart beside me, we look at the total current assets, which is the amount in current asset was decreased in 2019 and 2020, but increased to 3.19% in 2021 due to the reduction in 2019 and 2020. It demonstrates that company inefficiency in managing its short-term liquidity and operations, which can result in financial problem and also limit its capacity to satisfy its financial obligation. In addition, in percentage of retained earning in 2019 was 59.91%, but in 2020 it decreased to 52.62%. It indicates that the company is not making sufficient profit or is not successfully manage its profit, so which can limit its capacity to go and satisfy its financial responsibilities. However, in 2021, the percentage will ease to 54.22%. This indicates that investors anticipate more growth in the future and get more profit in the future. Next, we move to the analysis of common size statement of financial position by Hapsay Industry Berhad as at 31 December also. So this is the percentage of common size for this company. Based on the percentage of current asset in 2019 is 62.92% and will grow to 3.3% in 2020. This demonstrates that the company capacity to effectively manage its short-term liquidity and operations can help it maintain financial stability and meet its financial obligation. So by 2021, the percentage had decreased. This illustrates the inefficiency of its short-term liquidity. So next, we look at the retained earning in 2019 and 2020 and also 2021. So I can conclude that the result will make it more difficult for a company to invest in new opportunity to grow. So last but not least, for analysis of common size statement of financial position by Dutch Lady Industry Berhad as at 31 December, according to the current asset 2019 and 2020, the percentage was decreased from 70.89% to 57.82%, and it will increase to 8.76% in 2021. So this shows that the corporation has a greater capacity to satisfy its future short-term obligation in 2020 and also above in the future. So furthermore, we look at the percentage of retained earning. So I can conclude that this company is making sufficient profit. So as a conclusion, we choose Dutch Lady Make is the next best investment according to the total comparative analysis of the common size statement. So these corporations had the higher percentage of current asset and liability. So Dutch Lady Make will have market stability and performance to both profitability in the future. I think that's all. Thank you.
Hi and Assalamualaikum. My name is Nur Alia Suraya. So next, I will explain the horizontal analysis. So for horizontal analysis, we calculate the index number. The formula for the index number is current year divided by base year, and we multiply by 100%. We also prepared the index numbers trend in a table form and chart for each company for the years 2019 and to 2021. So after we analyze these three companies, we identified that Nestle have a good performance in manage their company, because even though their other item has unstable. This is because Nestle constantly grows revenue that increase yearly more than Dutch Lady and Hapsang. Other than that, for cost of goods sold, Nestle also maximize their cost because, as we can see, the increasing from 2019 to 2021, the changes drastically happen in the 3 years. So we conclude that Nestle is the best performance when it comes to index number analysis. This is because the company is not only increasing its revenue each year, but also they have stability in terms of performance.
Assalamualaikum warahmatullahi wabarakatuh, and my name is Muhammad Abizuddin Rosli from BA2513B, and I will continue further for chapter 4, which is company analysis for all three companies in 3 years. Company analysis aiming for the performance of the company and its market value. Without wasting our times, we can start with analysis of Nestle Malaysia Berhad first, which is the current ratio of Nestle for the year of 2019, where the company is unable to fulfill the short-term obligation because the frequent or times for they to pay or meet the short-term obligation is less than 1 time. Same situation in 2020 and 2021. All 3 years of Nestle current ratio is less than 1, respectively 0.6484, 0.5943, and 0.5911. Next, for the quick ratio, I will say that this ratio also shows that this company is unable to fulfill the short-term obligation too. It is because the results are 0.3149, 0.2656, and 0.2048, respectively for 2 years, 2019, 2020, 2021. It means it does not over for 1 time. Unfortunately, for net working capital seems problematic too, since the ratio result all shows is in negative sign. Means that Nestle is having more current liability compared to current assets. To conclude, Nestle is not capable to pay off its short-term liabilities and expenses of the company. It results worse for the company ability to meet the short-term obligation or the current liability when they are due. So we move to activity or efficiency ratio and for Nestle company, and we can see that we already pick Tato, and ECP ratio for this category, and we can see that this category shows good improvement from the previous year and the current year, because you can see the Arto and Tato shows the increased trend, and ECP ratio shows the good period of time to this company collect debt from their debtors. And next, for the leverage ratio, we can see that from the graph, the debt ratio, debt to equity ratio, and time interest and ratio seems not in a good condition, because in each year they come up with increased trend from current year, from previous year, and it shows that the result from this category shows that the higher degree of age ratio, so its result is higher financial and credit risk, because the company is subject to high fixed payment obligation and interest payment, and thus will reduce their profit as well. So we move to the profitability ratio for Nestle. We can see that we already choose for net profit margin ratio, return on asset, and return on equity ratio for this company, and it shows all downgrade trend for this company. It shows that the company is not efficient in their operation to generate more profit and or income for the Nestle company from 2019 till 2021. Okay, last but not least, we have a stock market ratio for Nestle company. So we already calculate the amount for EPS ratio, BVPS ratio, MPBV ratio, PR ratio, PCF ratio, DPS, DY, and DPR ratio. And this will conduct for the comparative analysis then. And next we move to the last company, which is the Dutch Lady company, and we move to the liquidity ratio first. The first ratio in liquidity is current ratio, and then the quick ratio seems good result for this ratio, and as well as for the net working capital too, which is 2021 resulting in positive signs of ratio, and also the highest ratio compared to the other years. And for the activity or efficiency ratio for the lady, we can see that for Arto, ACP, and Tatus also shows a good or positive sign from 2021. It is because the Arto resulting the improvement or increasing line, and ACP ratio shows the downtrend line or downtrend graph for each years from 2019 till 2021, and is resulting that the company is good in their management of their activity. So we move to the analysis of the specialty milk industry Berhad for leverage ratio, which is we can see that the debt ratio, the debt to equity ratio, and the financial leverage ratio, and also time interest end ratio for this company is in a good way, because it shows a down line or downgrade or down pattern for the graph compared to 3 years, which is 2021 is the best years for leverage ratio. It means that the company are good in managing their leverage or debt. However, for the year of 2021, in profitability ratio for Dutch Lady, we can see that it shows that the revenue is less compared to the other years, but it's still good in other categories ratio. And also for the stock market ratio, as I said before, it's very important for the potential investor looking at this ratio. And also why we divide the graph is because if we combine in one graph, we cannot see the DPS or DY graph for these categories. Next, for the overall comparative analysis, for the growth rate after we do our calculating, we can see the result. The Nestle have 2.45%, respectively 1.56 in 2020 and 0.40 in 2021, and also for Hapsang negative 6.15, negative 5.45, and 5.21 in 2021. And for the nationality, we get that 26.98 growth rate. 2020 we can get 13.30 percentage, and for last nationality 2021 we get 56.46 for the growth rate at the current year. And next, we move to the industrial average, which is we need to calculate this after we do the growth rate for overall comparative analysis, because this will be the guideline, or we need to refer for IA industrial average for each company based on their ROE percentage and MPBV times. So we can see that Nestle have 99.4 for their percentage of their ROE, and 54.07 for MPV. So the Hapsang 24.96 for the percentage of ROE, and 5.112 for MPBV. So the Dutch Lady, we can see that we get 60.05 for ROE, which is their percentage, and 13.93 times for the MPBV. And the last but not least, for overall comparative analysis, we do the MPBV and ROE metrics as shown in this slide. So we can see that the overvalue for Nestle 2020 and Dutch Lady 2020 fair value with both high ROE and high PBVR for Hubsan 2020 and the Lady 2019, and low ROE and low PBVR, which is fair value for Nestle 2021 and Hubsan 2021. And the most important thing that the investor will see and will do the decision, they will look undervalue, which is high ROE and low PBVR, and it's result that Nestle 2019 is good compared to other years, and Hubsan is 2019 also compared to other years. But the Dutch Lady, we can see the most good company in 2021 compared to other years of Dutch Lady. So that's all from me for comparative analysis, and we move to the last person.
I'm going to continue with recommendation. In order to make sure that the company asset allocation matches company financial objective and risk tolerance, it is also crucial to examine and modify it on a regular basis. It is advised to consult a financial advisor or other expert. A company can employ a number of ways to enhance its overall assets, which are revenue. A corporation can create greater cash flow, which can be utilized to invest in new assets or enhance existing ones by growing revenue. To extend its operation and raise the value of all its assets, a company may invest in additional assets like machinery, real estate, or technology. Important to take note, the best strategy depends on the specific situation of the company and its goals. Next, a low ratio of liabilities to assets may also signal to creditors and investors that a company is financially secure and less hazardous to do business with. The company can use a number of techniques to reduce debt and reduce its overall liabilities. The company can make sure that it has enough cash in hand to meet its obligation by managing cash flow more skillfully. So increasing resources corporation can increasing asset and increasing its asset to liability ratio, which might provide the impression that the company is more financially stable to creditors and investors.